How has been your day? Today, the market is all about jitters and glitters. Yes, and why wouldn't it be? Now, if you just see the first half of the day, Nifty fell 250 points from the first 30-minute candle high, and after 12:45 the market just rose 350 points and it closed very strong. Now, some would say the reason for such a strong move is this: US and Iran closing in on one page memo to end war, officials say. Now, this is the reason that market has gone. Now, that's not the only reason. The news based traders might believe that this is the reason, and some group of traders might think this is the reason. Now, if you see, from 2nd April Nifty has gone up by 10%, and then it consolidated in a tight fashion, forming some sort of volatility contraction pattern. We can see the price drop of 3.2% in the first swing. In the second swing it fell by 2.2%. In the third swing it fell by 1.6%, and in the fourth swing it fell by 1%. Now, if this is not VCP pattern, now what else would be a VCP pattern, right? So some swing traders might say the writing is already on the wall and it's just for us to analyze it in a way that we have studied in the past. So this is a VCP pattern for swing traders, and this is the reason that market has gone up for some traders. Now, be it whatever, I just recommend and advise you to stick to one style of trading. Don't be a news based trader on Monday, and don't be a technical side trader on Tuesday, and fundamental investor on Wednesday, etc. etc. You just have to stick one pattern of trading or investing. Now, coming back to our trade today. Now, we have already shortlisted Azad Engineering for our trade today, and we didn't just shortlist out of blue. We found there was a quick momentum of 65% in 23 days starting from 24th of March, and then there was some sort of linear pullback, and since we want to trade when the price is getting closer to EMA and give some sort of signal, we have decided to take entry on PDH, which is 2180, with an SL at 2130. Now, that was the plan that we have thought of yesterday, and we have executed it the same way. Right now, what happened? Now, we have also placed a GTT order in Zerodha at 2180, and the order got executed. Now, here is a little twist in the tail. Now, if you just see this trade, it might look that the first 30-minute candle has closed strong, but when I just went back into 15 minutes time frame, the first candle here did not close strong. It kind of squatted. So, in my experience, when the candle closes not so strong or closes weak, it often ends up taking an SL. Now, as per that, I had to close my position right here at 2165. Now, what happened after that? The immediate candle has gone straight and closed strong. Now, after that, along with the market, even this has come down, but I had to exit. So my initial stop loss, the planned stop loss, was 0.4% of my capital, but as I have exited in the first 15 minutes after looking at week close, I have lost only 0.5%, 15% of capital, which is good in a sense. But if you see what happened by the end of the day, the stock closed strong. So I kind of was in a confusion what exactly to do. So now this has been some sort of improvement that I would like to implement from the next time. So from the next trades, all kind of trades, I will exit some part at the close of 15 minutes if it's quartered, and rest at the logical SL, which happens to be PDL. Now what did I mean by that? Let us say my buy quantity is 100. Okay, buy is equal to 100 quantity. I'll wait for the first 15 minutes, and after first 15 minutes, if the candle is closing, let's say it's squatted after 15 minutes, I have seen a squat, then I will exit 50% quantity. Okay, and the rest of the quantity I will keep at PDL. In this case, that is our logical stop. Now what happens in that case? So if I follow this kind of strategy, now what will happen is that I will exit 50% of the quantity. So I'll be losing how much R? Technically, in this case, probably I'll be losing somewhere around 0.08 R. And if my SL gets taken down completely, which is at PDL, I will lose another 0.2 R. So the net is 0.28 R instead of 0.4 R, which was the initial SL that I have decided upon. Now if just in a case like this, where the first 50 quantity I'll exit with an SL, but I still hold the next 50 quantity, and since it gave a very strong close, I can hold some quantity and I can pyramid my position in the coming days. So that is a very good learning to in this trade. So good, I'm sorry. So this is definitely a good learning for me, how to exit if stock squats in 15 minutes, isn't it? But never mind, we'll keep learning and we'll keep moving. And let's just get back to what happened with our yesterday's position, Amber Enterprises. Now Amber Enterprises I have shortlisted on Tuesday and I have taken a trade on Wednesday. So Amber Enterprises is also the same thing. Now you can see there's a strong momentum, there is a pause, and not just a pause, the stock also attempted a breakout, and this pivot breakout has failed and it kind of came back to the EMS, which is a favorite place to be, and then it kind of attempted again. So in this case we have we have attempted to take a trade at exactly PDH of this. We have entered, and there was a good day yesterday and it also continued the same run today, a 5.58%. So folks, I just want you to understand, every trade you take will not be a winner. Okay, you have to understand that every trade is not a winner. Okay, so you have to accept that. In trading, we probably will be right 50% of the times, and 50% of the times you're wrong, or 25% of the times you're wrong, and 25% of the times you will not lose money. You have to accept that. The question is, it's not how many times you won. Okay, the question is, the real question that actually any trader would have to answer is, how much money did you make when you are right? That is a real question. For example, I can allocate a 5% of my capital to a trade which actually gives me 20R. Now what kind of impact that would create on my portfolio? Right, it creates nothing. But at the same time, say I have allocated 33% of my capital to a trade which moved to a trade, okay, and it moved 15%. Now this kind of allocation for a right move will have 5% impact on my portfolio, isn't it? Now, a 5% allocation to a trade and say it moved 30%. Now, what kind of impact it will have on your portfolio? It's simple, right? 30% divided by 20, that is 1.5% impact on my portfolio. So the position sizing is very important, okay? And that's the lesson that I would like to teach you today. And what is the stock that we have shortlisted for tomorrow? Shipping Corporation of India. This has already been on my watch list, and if you can see the kind of move it gave in the past few days, it was tremendous. Okay, 45% in 9 days, and then there was an excellent pullback to our favorite EMAs. We probably might have anticipated a trade here, and then if we could have entered here, it would have given us somewhere close to 10%. And today it again gave me an opportunity because it was in an expansion mode and it kind of touched the 8 EMA. So we placed an order at 314 types. Okay, now let's just see the kind of position sizing and trade that we have learned today. Let's just understand it from here. Okay, so now what happens is that now this is a very good candle and we can plan a reversal entry here. Now the PDH is 296.7 and the PDL is 284.6. Now that would be our logical entry and logical ESL, right? So let's just go back to 30 minutes time frame and see what happened on 27th April. So this is 27th April. Now if we go to lower time frame, I can understand there was a sharp, though this is PDH, I would definitely take a trade here. Now this is my entry and this is my ESL, logical ESL. Okay, now what happened is that the stock broke the first okay, let's just look at it in the 15-minute time frame. Okay, the stock broke at 9:30 and it never came back to the levels. Okay, now this is the kind of trade that we always want to have, a smooth runner. Now what would have been the SL if I had taken entry here? It would be probably close to 2%, and what is the reward I would have got? 7%. That's a 3-hour trade, and the trade did not end here. It went higher and higher, but it never kind of touched our initial entry. So for a risk of 2%, we would have captured 11%, which is nothing but a 5-hour trade. Now if you have allocated 25% to this, it would have an impact of 1.25% on your portfolio. So that's our trade for today. Let's see what happens tomorrow, and I'll keep you updated with respect to Shipping Corporation of India trade that I have taken on Wednesday. Thank you folks. Have a nice day. Bye.